Why don't you have a look at that, folks? Look at this. This is just 8 days. 8 days. If we go back to the market on last Monday, people were panic selling stocks left and right. They could not wait to get out of these positions. The Japanese carry trade, if I had $1 for every time that was mentioned on that Monday, I would probably have enough to buy the whole entire stock market. It was unbelievable. People were panicking, selling left and right. And what do we have to show for it? Just 8 days later. Well, since that time, Shopify stock has gained 34%. Palantir stock is up 33%. Starbucks stock is up 30%. Nvidia stock's up 17%. Meta stock's up over 12%. The Nasdaq's up 6.5%. The S&P 500's up about 5%. And that's in 8 days. Isn't it unbelievable how fast things can switch in the stock market? The public count today up over $71,000. A public count, as calculated by Fidelity Investments, has gotten an average return per year over the last 5 years of 24% versus S&P 500 of 15% a year. So we've definitely beaten the market by quite a considerable amount. Now, in today's video, this is just going to be a straight gem dropper for you guys here today. We're going to go through 7 reasons people suck at investing, the mistakes they make, so you guys don't fall into these traps and you don't make these mistakes. And if you're a really good investor, you will not be making any of these mistakes we go over here today. If you are not a good investor, you are going to be making these mistakes. And the more of these 7 mistakes you make, the more it's going to cost you in terms of the returns you're going to get over time, and likely you'll lose money over time, where we're talking about you won't even be able to keep up with the market. You might even actually go negative versus the market overall, okay? I hope everybody really appreciates this video here today. All I ask from you guys is if you do, let me know in the comments section. Give me a thumbs up on the video. Appreciate you. This is not a video for softies. If you want me to just tell you everybody's great at investing, it's an absolute lie. Most people are very bad at this, and we're going to go over this. Okay. I hope you guys really appreciate this video here today, and let me know if you do. Okay. Alrighty. So first one up here. You think you're more intelligent than you really are. So this happens to a lot of people in the market. They think they're smarter than they really are, and why is that? Why do people fall into this trap? Well, naturally, a lot of people have pride, right? And so your pride's going to tell you you can outsmart the system, you can be smarter than everybody else, you can pull off miracles and these sorts of things, right? And so many times, some of the smartest individuals in regards to maybe IQ are some of the worst investors, because they think they can do the impossible in the market, such as do things like timing the market, which gets into my next little picture I have for you guys. Timing the market, right? The truth is, time in the market beats time in the market. It always has and it always will. And anybody that tries to tell you different is just not dealing in realities. The realities are, you have to stay invested in the market over time. There's certain time periods, if you want to invest heavier, you can, or invest lighter, you can, right? But at the end of the day, you've got to stay invested in the market over time, because you can't time the market. You literally can't. Anybody that thinks they can time the market, to me, they're not intelligent. Because real intelligence, in my personal opinion, understands you cannot predict when exactly the stock market's going to crash and when the stock market's going to go up. There's never been anybody in history to do that. There never will be anybody in history to do that. It doesn't matter how much you've studied in economics. It doesn't matter how much you've studied in relation to companies and business cycles. And I've read all the books and I've studied all. I tell you, I can't predict what the market's going to do over the next 5 months or next even 5 days or 5 years for that matter, right? I can tell you over the long term, the market's going to likely go up a lot. I can tell you certain companies are going to do very well, likely. But without a doubt, you can't time the market. And so a lot of people fall into this trap overall. It's one of the reasons they suck at investing, because one minute they're all in their portfolio, right? Next minute they're margining out money because they're so bullish. Market turns against them. Next minute they're selling all their stocks because they think it's the end of the world. They think that the stock market's going to crash now. And they're in and they're out and they're in and they're out, and they're completely unstable, right? And to me, an unstable person is not an intelligent person. But they think they are, right? No, this is a cost of timing the market and trying to do this game of thinking you're smarter than you really are, right? And you're in and you're out of the stock market. If you miss just the best 10 days in the market, just the best 10, over a 20-year span, your returns are likely going to be cut in over half. You have 50% plus less returns. If you just miss the 10 best days in the S&P 500 over a 20-year span, roughly, right? And keep in mind, almost always the best days in the market, guess when they come? They come in downtrending markets. They come when the stock market has just gone through a crash or is currently going through a crash. And so that's a little food for thought in regards to that. A lot of times people assume the best days in the stock market, the best times you're going to have is when the economy is great, is when unemployment's really low, is when consumer sentiment's really high. No. Many times the best returns you'll get is coming out of downturns when things are really ugly, unemployment rates are really high, consumer sentiment numbers are really bad, coming off of high bouts of inflation, right? Where the consumer is still very damaged by inflation, but things are getting a little bit better from a perception issue, but it's still like rough out there, right? And so a lot of times people think the stock market is the economy and the economy is the stock market. I've seen plenty of times when people feel good out there, the consumer feels good, the sentiment around the consumer is really high, right? And the stock market's not doing a dang thing. And I've seen other time periods when consumer sentiment, look at the last 2 years, look at 2023, you can look at 2024, consumer sentiment's been horrible, small business optimism index has been horrible, and yet look at the stock market, up and away, right? You cannot time this market at all. Keep this in mind. I'm showing you right now in front of you, these are the world's richest people. Name one person right there that can time the market. Name one. None of them. Including my investing legend. He's up there, right up there, Warren Buffett. He can't time the market. He'll tell you himself he can't time the market, and I know damn well I've studied every basically move Warren Buffett's made over his career, and I can tell you Warren Buffett can't time the market. That man was buying railroad stocks at all-time highs right before the great financial crisis hit. What a mistake that was, right? He's been selling and building cash now for 12 years while the market just went higher and higher and higher and higher, right? So at the end of the day, even the big Buffet can't time the market, and he would tell you that himself. None of these guys can. Elon can't, right? Mr. LVMH can't, Bezos can't, Zuckerberg can't, none of these guys can. At the end of the day, they got rich by holding assets over the long term. And honestly, all these guys would be richer, they all would be richer if they had just kept holding their assets and not sold them off over the years. A lot of times these guys will sell off stock over the years to go buy big mansions and go buy whatever it is they want to buy, yachts and blah, 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 or diversify their funds around. Actually, they would, I would almost guarantee you every single person on this list would be richer right now if they just held all their assets. And it's absolutely incredible. So the moral of the story is, don't be a clown. A clown is somebody that thinks they're more intelligent than they really are. You can't time the market. No one can. Okay. Number two, you invest or you don't invest based upon if your guy is in office. You eat up everything that guy says. If that guy says things are bad, you say, oh, I'm not investing in the market. If that guy says things are great, you're like, ooh, baby, things are great. I better invest in the market. Listen. Don't be a sheep. Okay. All the politicians, they're always going to say the other guy's bad, it's all doomsday, and they're always going to say they're the best and they're the greatest. They all do the same thing. I have not seen one in my 34 years of being on this earth. I've never seen one who said, the other guy's so great, you should go vote for him. I've never seen a guy say, I'm bad, don't vote for me. No, they all say the other guy sucks and I'm the man and I'm going to be the one to take you to the finish line, okay? So don't buy in all the propaganda these guys pitch you. And it's all propaganda, but a lot of people they're sheep. They can't see through it, and they're like, they just eat that stuff up from these guys, these politicians. Like, come on, man, wake up at some point in time. You gotta wake up. Listen. I posted this inside the private group recently. So since we're in political season for the next few months, here's an important reminder to all the stock market investors. Since I've been alive, the only president to ever bad stock market was Bush Jr. Outside of that, everybody else has been up and away. And this just shows you over time, Dems, Republicans, whoever's in office, you better be invested in the market. You better be invested in the market. There's plenty of money to be made out there, and you have to be invested, okay? Don't buy in all the propaganda. All these different people are going to sell you. And if, like I got a little saying I put here for you guys. If you think any politician will make or break your success, you should just give up. You're lost. You're lost. Look in the mirror. There's one person who's going to dictate whether you're successful or not, There's a person on the planet, okay? If you're a believer in religion, you believe in God, those sorts of things, okay. But in terms of a person, a human on earth, there's one person that's going to dictate whether you're successful or not. And guess who it is? It's you. It's you. No politician's going to magically get in office and you're going to be rich. Oh, I'm rich now. Oh, this politician's in, I'm poor now. No, it doesn't work like that, okay? Look at all the most successful people in history. Did any of them say, oh, because this politician's in, I can't run my business now? I can't do anything now? No, they operate, they go out there, they make it happen. That's what winners do. Winners make it happen. Do you know who doesn't make it happen? Losers. Losers don't make it happen. Losers count on other people to bail them out. Hope this happens, that happens. Guess what? It's not going to happen, okay? Look in the mirror. If you're investing based upon if your guy's in office, like, you're lost. You are lost in this game. Third thing is, you don't know how to value stocks. So, a lot of times people don't know how to value stocks, but they're buying stocks. What I call that is gambling. If you do not know what you're doing in the market, you don't know how to properly value stocks. If you don't know about how to value stocks with different levels of growth rates, because you got to understand, the way you're going to value a stock if a company has 5% revenue growth versus if a company has 15% revenue growth versus if a company has 25% revenue growth versus if a company has 35% revenue growth, it's very different. How you're going to value the company based upon a trailing 12-month PE, a forward PE, a 2-year out forward PE, a price to sales ratio versus peers, a PE ratio versus peers. This is all stuff you've got to understand on a high level. If you do not understand this stuff, you're gambling in the market in the end, okay? I have a lot of YouTube videos over time. I explain a lot of this here and there, right? In 1000X, I got 2 full sections dedicated to how you value dividend stocks and value stocks and how to value growth stocks. Those help you out tremendously in teaching you these sorts of subjects, right? And even with 1000X, I had the developers plan this out exactly how I want it, where you can compare 3 companies versus each other. Trailing 12-month Ps, forward Ps, 2-year forward Ps. I had everything designed perfectly so it could save people massive amounts of time, right? And so if you don't know how to play this game, if you don't know how to do this, you don't know what you're doing in the market. You're just gambling money around, and that's going to come back to bite you big. And when I say it's going to come back to bite you, it's going to come back to bite you in tens of thousands of dollars or hundreds of thousands of dollars in terms of if you don't really know how to do these sorts of things, right? Pin comment down there. That's if you want to apply for my private group, if you want to apply for 1000X. I teach you everything you want to know. Like, it's all there. I got it all in videos, all course curriculum, teaching the details down the nitty gritty. Like, do what you want. Fourth thing is, I don't have time. I don't have time. I'm so busy. No, you aren't. No, you aren't. Okay? No, you aren't. People always make these excuses. I don't have time. I can't research stocks. I can't listen to conference calls. I can't read quarterly reports. Yes, you can. You're choosing to make excuses rather than do actual work. That's what you're choosing to do. There's not a person on this planet, I bet you any money, there's not a person that I couldn't go through and look at their day and be able to pinpoint, you're spending so much time doing this, you're wasting time on this, you're wasting time on that, you're wasting time on this. But people will justify it however they want. I have no time, right? But suddenly they stay up watching an extra 2 hours of Netflix at night, and they scroll TikTok for an hour and a half a day. I have no time. Baloney, man. Everybody has time. Everybody has time. The bottom line is you gotta do the work. If you're not willing to do the work, what are you doing? Gambling. You're gambling. And if you want to gamble, just come to my city, Las Vegas. Go down the strip. Have yourself a good old time, okay? If you want to invest, you want to be a big boy, you want to be a big girl, you better make time. You better not make excuses, because you're either going to make time or you're going to make excuses. There's no in between. You either make time or you make excuses to do the work. Now, let me run you through my life, okay? When I was 18, 20 years old, I worked multiple part-time jobs, either Walgreens, Einstein Bagels, my dad's pool route, right? I was a full-time student, full-time athlete, and guess what? I still made time to do the research work, to listen to conference calls, to do all this stuff I'm still doing to this day, right? 21 to 24, I worked at Quick Trip. I usually worked between 46 and 50 hours a week. Sometimes I'd go a little over 50 hours if I picked up extra shift for other managers or things like that. But usually it was 46 to 50 hours a week on my feet the whole time. You don't get breaks at Quick Trip. You don't get to go sit in the back on a chair. We don't even have chairs at Quick Trip that you could go sit in. You didn't get to go sit in the back and chill for an hour. No, that's on your feet, 46, 50 hours a week, every single week, walking around, doing all that, right? Running the stores. And at the end of the day, guess what? I still made time to do all this stuff. I'm still doing this day. 25, I took that year off. That was me trying retirement. Wasn't as much fun as I thought it was going to be. Yeah, I thought it was going to be really cool just to wake up and have nothing to do. No, it's not that cool, okay? If the biggest thing in your day is just going to the gym, it's not as cool as you think it is in your head, okay? 26 to 27, I ran my real estate marketing company, which was a small business. I had my YouTube channels, which were small at that time, relative, right? So I was basically running 2 small businesses, had a wife, had a kid, and still made it happen, right? 28 to 34, currently, I have big YouTube channels, obviously. I have 3 kids, 3 houses, 2 real estate investment properties, right? I got a wife. I got the private group to run and always record them videos, including I just recorded them a video in the past like 48 hours that goes super in depth on diversity, how many stocks to own, all those sorts of different subjects, right? I've got to run 1000X and make sure that's all perfect and exactly how I want it. And I still make time. I listened to 2 conference calls last night. The previous night I listened to 2 conference calls. Like, I still make time for it all. You either make time or you make excuses. Put that in your brain. Always, man, maybe you should put that as your backdrop on your phone or something. You either make time or you make excuses. It's just facts, okay? Next thing up here. This is a big reason why a lot of people suck at investing, is they don't even have their income and expenses straight before they start investing. If you don't have your income and expenses straight, you stand no chance. Like if you told me what's the number one thing, the number one tip I would give to any investor, number one tip over everything, get your money right. Before you ever worry about balance sheets and income statements and cash flows and P ratios and price to sales ratios and percent growth rates and gross margins and net margins, before any of that, get your money right. Got to have more income than expenses every single month. If you don't, you got to figure out how to get there. Either you need to cut expenses or you need to raise your income. Now, I can tell you from my standpoint, I think it's easier to raise your income than drop your expenses. I don't know if I've ever seen anybody really be able to take a step back once they get used to a certain type of living standard. I just see it time and time again where people really have a lot of trouble with that. If somebody's used to living in a home, they don't want to go back to living in an apartment, right? If somebody's used to driving a Mercedes, they really don't want to go back to driving a Toyota Camry. I see it time and time again where it's just really hard for people to like go there mentally to like drop lifestyle. So if you cannot drop lifestyle, then the next best thing is getting your earnings up, right? Which a lot of people just fall victim to their job. They think like their workplace is only workplace. Like, go find other jobs. There's plenty of jobs out there. You can find opportunities, right? You can start a side hustle. You can start a side business. Like once again, look in the mirror. You can do this. You can do this. You can do this. And it doesn't take a lot of money to get a business started or something like that, right? I was watching a video here recently on YouTube, and it was kind of like, it had tones of like positive about like socialism, just to be quite frank. And I was reading the comments, and it was just so sad to me that some people were like, I can never start a business. Yeah, this is the best way. Like government, supports everything and whatnot. And I was just thinking about the days my dad started his small pool business with no money behind him, right? I was thinking about the days I started my real estate marketing company with, a few $1,000s. It's not like that's some crazy amount of money. Like I think some people think you need to be a multimillionaire before you start a business. No, actually most multimillionaires are not looking to start a business because they're already rich at that point in time, right? A lot of times people that start businesses are actually from kind of the lower tiers, and then you kind of build up from there. So the moral of the story is you got to get your income and expenses right. That puts you in a situation where you're able to buy stocks every single month, hopefully multiple times a month, but at least once a month. And that sets you up in a situation where you don't fear crashes. You don't fear corrections in the market. You're able to take advantage of buy the dip opportunities in the market, right? And you're able to be a more stable investor. I think one thing that makes people more unstable in regards to the market is in a situation where They do not have any funds to invest in the market, so they get freaked out anytime the market drops because they're thinking, oh my gosh, this is all my money. I can't buy with anything, so therefore I'm screwed. That's why I always say income and expenses. Get that straight before you ever worry about, do I buy Meta stock? Do I buy Apple stock? Do I buy Microsoft? Do I buy Google McDougal? Like, who do I buy? Do I buy Tesla? No. Get your income and expenses right, then we can talk. Sixth thing up here. Short-term versus long-term phenomenon. A lot of people get way too caught up in the short term, right? Rather than focusing on the long term in regards to investing. When it comes to running a business, when it comes to investing in businesses, it's all about the long term, right? A lot of things are going to go wrong in the short term. A lot of things can go wrong in the short term, right? You could have some faulty product or service at a particular time that negatively affects your business. Consumer sentiment could be bad, right? The economy could be bad. There's a million different things. At the end of the day, you got to say, is this company on a good long-term trajectory? And not just try to look at what's happening today, but what's likely to happen over the next year, 2 years, 3 years, 4 years, 5 years, right? Sometimes you're going to look at history to kind of see if there's a trend there, to kind of figure out if something's going to likely transpire in the future as well, right? And experience comes along with that. But a lot of times people get too caught up in the short term. They make their justifications and their judgments based upon what happened in the short term, and they get lost in this game. And so coming from this, I always cared a lot about sports growing up, and still to this day I care a decent amount about sports. I'm just not as into it as I used to be, right? But there was a lot of great athletes that became like the best at their particular sports, or one of the best, right? And their careers got off to a really bad start. There was a guy named Peyton Manning, quarterback. He threw, I believe that was a rookie record, and I think that's still a rookie record. The most interceptions in a season, 28 interceptions. Like, how embarrassing. He threw more interceptions than touchdowns. You could have easily said with Peyton Manning, you know what? He's horrible. 28 interceptions. He threw more interceptions than touchdowns. That's awful. That should never happen. And so therefore, bench him. His career is over. You could have said that, but Peyton Manning ended up becoming one of the greatest quarterbacks in history, right? Jerry Rice ended up becoming the greatest receiver in history. And did you know in his rookie season, the guy couldn't catch a pass? He couldn't catch a pass. Like, it's insane. It was ridiculous. The guy was dropping balls left and right. Easy catches. Game-winning touchdowns. And the dude just couldn't catch. And yet, he ended up becoming the greatest receiver ever. And I was looking at this, so I wanted to stay on this kind of NFL thing, right? And I was looking at these offensive rookies of the year. And I was looking at these guys, and I was like, none of these guys even ever made it to the Hall of Fame. And actually, most of them were not even in the NFL anymore a few years later. Literally, like a few years later, they weren't even in the NFL. Percy Harvin, Sam Bradford, Cam Newton, RG3, Eddie Lacy, Odell, Todd Gurley. None of those guys ended up becoming Hall of Famers. And literally, like, almost all those guys were out of the NFL a few seasons after, right? Isn't that incredible? But we could have said, these guys are going to be the greatest ever at their positions because they had a great rookie season. So it goes back to the stock market. Don't get too caught up into this, man. Don't get too caught up into this, or you're going to miss this. You're going to totally miss this by just focusing on the short-term stuff, okay? That's next up. Already number 7. You're too afraid to lose. So I stayed on the kind of the sports subject here because I think sports is great with kind of winning, losing, who's doing well, who's not doing well, right? Michael Jordan regarded as the greatest basketball player ever by many people, right? The guy went home at night after he lost 366 games. 366 times he drove home realizing, I lost a game, right? And he still ended up becoming what would be considered the best at that. So in the stock market, you got to understand a few things. You're not going to get them all right. You're going to take losses. You have to be willing to accept that. Every single time I go to invest into a company, I always believe I'm going to make money in that, right? I always think I'm going to make money in that. Otherwise, I wouldn't put money in. But in the back of my mind, I also understand I might lose. I might not make money in this stock, right? This one might go bad. And so you have to get over that fear of failure. You have to get rid of the fear of failure because you will fail sometimes, right? You will make some mistakes. And I'll put it to you like this. If I had to think about a life worth living, it would be a life in which you made mistakes along the road, right? And you learned from those mistakes and you got better. Problem mistakes are if you keep making the same mistake again and again and again, right? Or you're making a mistake and you still make that mistake. That's a problem. But naturally, it's no different than a kid learning to walk. He's going to make mistakes, or she's going to make mistakes when they're learning to walk, right? They're going to take a bad step and fall over, go boom, boom. It happens all the time. And so if I get to live to be an old person someday, I hope to be able to look back and tell people about, all the stocks I got wrong over the 70, 80 years I was investing. There was this one that went bad, and there was this one. And I thought this company was going to be really good in 2039, and man, that investment really bad. I had to sell for a big loss in 2042, right? Like that's a life worth living. A life not worth living is one where, you never made a mistake, you never took a risk, you never did anything. So get past the fear. Get past the fear. Get past I've got to judge myself for making a mistake, because you will make mistakes. It's part of the process. It's part of learning. It's part of growing. If you're not making mistakes and learning from those mistakes, you're not growing. You're not growing as a person. You're not growing as an investor, right? And I've made plenty of mistakes over my time, right? I made plenty of mistakes in the public account over the last 5 years. And look at the returns of the public account the past 5 years, right? Incredible. And that's with plenty of mistakes I made over the past 5 years. So get past that fear of judgment from others, from yourself, about making mistakes. It's part of the process. Be proud of your mistakes. Be proud that you learn from that, you adapt it, and hopefully you never make that mistake again. When I look back at all my past mistakes I've made in the market, which I've been in the market 15 years now, made plenty of mistakes. I sold plenty of stocks for losses. It's part of the process. It's the cost of doing business, right? If you run a business, guess what? There's going to be plenty of times you thought this was going to be a smart decision, and it wasn't a smart decision, right? You made a mistake. It's life. It's life. That's part of what life's all about, is it not? Like making mistakes, learning from that, growing, not making those mistakes again, getting better. That's what it's all about, right? So the moral of the story is here, folks, don't suck at investing. Don't make those mistakes, and get on the right track. All right, guys, appreciate you joining me. This was just a gem dropper of a video here today. Thanks so much for joining me, folks. If you're looking to apply, join my private stock group, my private wealth group, get access to 1000xstocks.com. I'll put that as a pinned comment down there. You can fill out an application and join us in there and take your game up to a much higher level than where you're at, and learn everything I have to teach you, which is a whole lot of stuff. Much love and have a great day.